Most traders think that the goal in trading is to win more trades, and honestly, that couldn't be further from the truth. There is no surprise that there are a lot of you out there that can't stay profitable, can't pass your funded accounts, and can't get payouts, okay? And it's because that we have this idea that we need to have a higher win rate. I'm going to show you exactly how, with even just as low as a 30% win rate, you can be extremely and highly profitable so that you can be a profitable trader, you can pass your funded accounts, and you can actually make payouts. Alrighty, the win rate trap. So problem is most traders, they actually just obsess over having a good win rate, right? When in reality, it's the totally wrong metric, okay? If someone tells you they've got an 80% win rate, that doesn't mean anything, okay? That genuinely doesn't mean anything. Are they taking one trade a month? Are they taking one trade every 3 months? Like, you don't know. Same with people that are saying they've got 90% or 95%. Could that strategy be profitable? I mean, yes, sure. Of course it can be if they've got results, but honestly, I wouldn't listen to everything you see online, okay? Even with an 80% taking one trade a month, you're not going to be making that much money, okay? It's just the wrong metric. The metric that you should be looking is your RR, okay? Your total RR. If I'm making 5 RR a month and I've got 12 months or whatever, that's a whole lot more profitable than if I'm making 1 RR a month, but I've got a 90% win rate, right? So understand the actual returns you're getting, okay? Some people express it as percentage points. If you're risking 1%, it's the same as your RR, but it's the same thing, really. 70% win rate, it can still blow your account, okay? If you're not getting enough actual RR, then you're not going to end up being profitable, okay? 1 to 1 for 70 is fine. But if you're at a point where you're doing negatives, where you're at 0.3 risk reward for every 1% risk that you take, you're going to struggle to find genuine profitability in trading, okay? You're going to struggle to actually just make money in general, all right? Meanwhile, while a 30% win rate, depending on your RR, okay, I run a 1 to 3 risk reward. With a 30% win rate, you could definitely see results over a longer period of time, okay, over a stretch of different trades, right? So that can make you consistently profitable, okay? 70% win rate, you're not making enough money, right, on each time you win, you're going to struggle to be profitable, okay? Sometimes it's too just up and down, too barcode like action, right? It's just not smooth and steady. I mean, 30% win rate, when you've got the proper risk rewards, right, this is what it'll be looking like, okay? You'll go through down periods, obviously. That's just how it is, but it can be a whole lot better and a whole lot more profitable than a 70% win rate, all right? So that's the win rate trap. Don't believe and don't base traders off their win rate. Just because a trader says they have a 70% win rate, that doesn't mean they're a good trader, okay? I mean, does that mean they win 70% of their trades? Yes. But does that mean they actually make more money than someone who trades a maybe 30% win rate? Maybe not, right? So don't get sucked into looking at win rate. Start looking at other things as well, like the RR and the actual percentage return. All right, so what is the formula, okay? So win rate, it means nothing without the risk reward ratio, okay? As I've just mentioned. My setup, it's honestly around 30 to 35%, but just for simplicity's sake, we're gonna go with 30% just because it rounds up very nicely. Risk reward, 1 to 3 risk reward, and then a 2% risk, okay? Using these examples, all right? If I've got 10 trades, okay? 10 trades, which means 3 wins times 6, and then plus 7 losses times negative 2%, right? Or just times 2% because that's my losses, okay? So that's plus 18%. Minus 14%, okay, the losses, which equals a total of 4%, okay? It's not a huge figure, but this is only through 10 trades, okay? If we're using the exact same formula through 20 trades, everything is doubled here, okay? So 4% becomes 8%. And if you're trading 20 trades per month, okay, which is not crazy with my strategy, I mean, that's very, very doable. 8% a month, times that by 10, you've got 80%, then you've got 96% in 1 year, okay? Risking 2%. You're basically doubling your money in 12 months, all right? With a 30% win rate, okay? That to me is genuinely crazy, okay? Pretty much you can see here what it would look like and what it would look like on the charts purely from 10 trades, all right? If you 10x this becomes 60%, right? This is not negative 60%, but you understand the point. If you're repeating this so much, okay, over 10 trades, 20 trades, 50 trades, 100 trades, you can see the results that way, okay? The results, they just continue on themselves using this 30% win rate strategy with a 1 to 3 risk rewards. When you do risk 2%, you can be risking 1%, you could be risking however much you want, but for argument's sake, I'm risking 2%. So this is what the formula looks like. All right, so here we've got a potential setup, okay? We've got USD, CHF, and we can see here, this is what the strategy actually looks like, okay? This is what the trades look like themselves. We've got break of structure to the upside. We've got these major swing points here. And then we've got, like, obviously the trend is moving upwards, which is another great point. And we're pretty much just waiting for retracement to come in here, okay? That's pretty much it. Okay. There's really nothing more to the strategy. I mean, you've got fair value gaps here. There's obvious impulsive momentum to the upside. We have a very obvious trend to the upside. This is as simple as it gets. Okay. It's the 30% win rate, 30 to 35% win rate. It's not hard, really not hard at all. It's super simple. And here is a potential setup showing that. All right, now we've got the 4 rules in general, okay? So what actually is a strategy? So number 1, I look for a clean trend, okay? As shown in the previous trade, very clean trend. It's so obvious that it's bullish. Next question. I mean, like next point. We don't even have to question that. Then we've got a break of structure, okay? So break of structure on the 4-hour candle. Candle close, okay? Not a candle wick. Full candle close, a strong break of structure, done. We can see that's happened as well. Then we have a fair value gap. Again, that was obvious. We could see obvious bullish momentum and impulsive candles, which created fair value gaps. Done. Doesn't necessarily have to be near the 0.75 fib level, but just has to be within that leg of the break of structure. And then a liquidity sweep. This is optional, but very strongly preferred, okay? Unless if the trend is not so clear, then I'll require my plan to have a liquidity sweep. But if the trend is just so clear, like if the trend is moving like this, it's so obvious that it's bullish, right? I don't really need a liquidity sweep at this point here for me to enter in at this point like this and for it to hit take profit, okay? I don't really need it. It's so obvious that price is moving like that, okay? But if I've got price that looks like this, maybe like we can see, yeah, these swing points here, like we are eventually getting higher and higher, right? It is a bullish trend, but it is great to have this liquidity sweep here, and then this break of structure, and then wait for price to tap me in like this, okay? That is preferred, okay? It's optional, the swings, the liquidity sweeps, but they are very strongly preferred. So we've got trend, break of structure, fair value gap, and then sweeps, okay? Those are pretty much the 4 pillars to my strategy. It's really nothing hard. It's super, super simple. Alrighty, now we've got Euro USD, and we've got the exact same thing, but instead of this time being bullish, okay, where price is moving up, we're doing it where price is moving down, okay? So we can see here, is there a trend? Yep, the trend is obvious. Price is bearish, okay? Then we've got a break of structure, okay? So we can mark out our swing points. So realistically, these could be our swing points. So let's just start off with here like this, right? These are our major swing points. Yes, did we see a break of structure? We did, all right? Is there a fair value gap? Yes, there's fair value gap here, and there's some smaller ones here. They've already been filled in, but nonetheless, it has shown us that there is impulsive moves in the market, okay? And then we see a liquidity sweep right here. Very strong, very wick up-like, and then we break structure to the downside, okay? And this is the point where we wait for price to tap in and then either hit our take profit or a stop loss, okay? This is an example using a bearish example, okay? Where price is moving downwards. Alrighty, you've seen what the good trades look like. Now, how do I actually even skip the bad trades, okay? Because yes, you need to fit all of, your trades need to be all within your plan, okay? But there are bad trades that you should avoid, all right? So the chart looks choppy with no clear direction, just skip it, all right? If the charts are moving like this, you can't tell anything, okay? There's nothing here. It's all within that range. You can't make a legitimate buy or sell argument, okay? That's why I just completely avoid it. If it looks like a barcode, I avoid it, all right? I trade with all majors and minors, so there's 27 plus pairs to scan, so there's really no shortage of setups to see. Okay, don't think that if you can't see a setup just on Euro USD, where Euro USD is moving like this, and you don't trade for the day, that's not right, okay? There's so many pairs that you can look at, and so many pairs you can trade with, okay? So there's a lot of opportunities, bad setups, they cost me nothing by skipping, okay? You skip them, if they're not a part of my plan, okay, where there's not a clear trend, I skip it. And I know that with these 27 pairs, I'll always have an opportunity to see another setup form again, okay? It's like waiting at a bus stop, right? You're waiting for the bus stop, and the bus passes you, okay? The bus is gone. All right, you've missed it, the bus is gone. But you shouldn't worry because theoretically, there'll always be another bus coming, okay? You've missed the bus, but there's always another bus coming, okay? It's the exact same in trading. You've missed the trade, there'll always be another trade coming, okay? Unless the world ends tomorrow, then you'll have another trade, all right? Patience, definitely a part of the formula because you're trading with the 4-hour time frame. You need to be patient, okay? There aren't going to be setups always. Sometimes a lot of pairs will look like this barcode choppy action, okay? You just have to be patient, all right? It's a 4-hour swing trading strategy. You might go 1 day, 2 days, you could go 1 whole week, okay? 1 week, no trades, all right? 1 week, no trades, totally normal, okay? So we move on. So here we can see we've got like a genuine barcode-like structure. So we can see here, it's just all within this range. Nothing ever really happens. Like, can you even make a legitimate argument for anything? Is this a break of structure? Yeah, but there's liquidity resting here. It barely broke structure. Then we just move straight up back to the upside, maybe hit my stop loss, move down. We're still within this range. We're still moving around here, right? Can't make any legitimate argument of why you should buy and sell, All right. Meanwhile, we've got this price action where we can see, okay, we've got a break of structure here. Obviously, like very obvious trend and momentum. You can see here we had a liquidity sweep done. Let's slap on our fib from this point on, and then say, yep, we only just got tapped in, and then price it, take profit. Okay, that is the ideal scenario. Okay. I can see here exactly that we're moving up. Okay, we're constantly moving up. We're moving in one direction. All right. While this here, you can't. The one direction we're moving in is sideways. All right, and you can't profitably trade sideways trading. All right. So skip these bad trades. If there's no clear direction, just skip it. Okay. Just skip it. All right, now I've got a legitimate real life trade that I took, and I've made money off. And I'm going to break it down with you with full transparency. All right. So we can see here we've got our structure points here, right? We can see we've got our breaks of structure that continue to the upside. Okay. So that is our trend done. We can understand that there is a trend, okay? So that's done. So this point on here, it was at this point where I'd slapped my trade on, okay? From this point forward, I couldn't see any price action, okay? This is when I saw price starting to retrace to my entry, and that's why I decided to slap on a fib, okay? So we can see here we have a liquidity sweep, right? We've got a break of structure, the upside, okay? This is a bit of a candle close, but overall, this structure here is a full candle close, okay? So that's part of my plan that works, okay? Price is coming down, so I'd slap my order on here at the 1 to 3 risk reward, okay? And then very shortly after, within a few days, I'd hit the take profit, right? Price had come in, tapped into my entry level, and then we hit take profit, right? It's as simple as that. I'm on the 4-hour time frame. I only check the charts a few times, twice a day for 5 to 10 minutes, 15 minutes a day, okay? That's all I need to do. I marked out structure points from here on, actually, not from here on. I can see that the trend is obviously visible. See that we got a break of structure, a liquidity sweep here that we've broke through here. It's tapped in and we've made money, all right? It is really that simple. All right, now I'm going to show you a losing trade, all right? I'm going to be fully transparent. This is a real life trade that I lost a few $100 on. Like, it just is what it is. That's how it works, all right? That's the name of the game. Not everything's going to be a winner, right? So we can see here. So first, before we even start with that, is there a trend, all right? From this point onwards, yes, there is a trend. We're moving bearish here, and then we started breaking structure to the upside, so we're moving upwards, all right? I'm happy to look for buys at this point, okay? I'll mark out my structure point. So I've got this point here, and then this point here, and then technically this point here, okay? Right? Okay, from this point onwards, I can't see any more structure, okay? I'm waiting for price to hit my entry. So we've got our breaks of structure done. Let's mark out our figures here. So we've got this, we've got a very small liquidity sweep here. And then I slap on my fib right here, and then take profit at the major swing points, stop loss at the major swing points. From here, price had just ripped through my stop loss pretty quickly, all right, within 4 to 8 hours, okay? Did it fit my plan? Yes, it did, okay? There's a trend. Tick. Our swing points here, tick, right? Breaks of structure, strong break of structure. Fair value gap, tick. Liquidity sweep, tick. Okay. It all fit my plan, but I lost, all right? But that's it. We move on. Not every trade is going to be a winner, okay? There are going to be trades which are losers, and not all your losers have lessons to be learned, okay? This is a good loser. I would take this trade 10 out of 10 times again, all right? Even if I lost 10 in a row, I would still take trades that look like this, okay? Just because it simply follows my plan, all right? I'm following a process, all right? I'm not following and trying to make money, all right? I'm simply following a process that I set out for myself. A loss is not a mistake, okay? A loss inside the formula is simply just the cost of doing business, all right? You run a business, you're going to have expenses, and you need expenses to make money, all right? You need expenses to make profits, okay? Some people might tell you that every lesson, every loss is like a lesson, okay? When that it really couldn't be further from the truth, all right? There are losses that can be lessons, yes, of course. But if it's within the formula, if it's within your plan, then there's nothing to be learned from, okay? It's just statistics. Statistically, if your equity curve looks like this, all right, this is definitely profitable, okay? We can see that this is definitely profitable, all right? But there are going to be points where you're losing here, you've lost here, you've lost 2 in a row here, okay? It is statistics and you will lose, all right? So loss inside the formula, it's just simply the cost of doing business, all right? It's not an error, okay? It's not something you need to fix, all right? The mistake is entering without all 4 entry criteria, okay? So as I said, liquidity sweep optional, but very strong, highly recommended. So that could be, so a mistake here is entering without all 4, okay? So if you're missing like a fair value gap, if you're missing a proper break of structure, if there's no trend, okay? Moving your stop loss, all right? Or closing early and trying to take profits early, okay? That's a mistake. That's a mistake in your trading. And that's something that will cost you, all right? Not having just a loss that fits all your plan. That's not a mistake, okay? That's just purely business. That's purely a business expense. All right. Judging a trade by its outcome instead of its process is what destroys traders. All right. Did you lose money? Like in a loss? Yeah, you did lose money, but is it a part of your process? Did you stick to your process? Did you stick to your plan? Right? Because sticking to your process and sticking to your plan and losing, that's fine. Okay, that's perfectly fine. That's normal. That's purely statistics. But a mistake, even winning a trade when not all your metrics and parts of your plan, your criteria was met, having a win like that can actually be detrimental to your confidence in trading, and overall just it poisons your trading journal. Okay, at that point you're not even trading the plan. Okay, you're just trading random stuff. You're not following your plan. You're not executing a properly like vetted strategy. Okay, you're not executing it, so how can you expect to make longer term gains? Okay, because what feels like a win now or a few bad wins now, and you continuously take those trades, could end up very, very bad for you. Okay, so if you're not sticking to your plan, then you have no idea what you're doing. Okay, those are bad winners. All right, you can definitely have good losers. Okay, losing, if it follows your process, it's good loss to have. Okay, it's a good loss to have. Why do traders actually break the formula? All right, so let's say in this scenario, after 3 losses in a row, your brain says the strategy is broken. Okay, your brain can't mentally handle losing the money. All right, your brain can't handle watching your equity curve move down. All right, these kind of factors, your brain tells you that the strategy doesn't work. Okay, that the strategy itself is broken. When in reality, it isn't. Okay, it works perfectly fine. It's just purely numbers and statistics. Okay, so you widen the stop loss, you move to take profit, or you skip to the next valid trade. Okay, after these 3 first losses. When in reality, the formula, it only works if you execute it every single time consistently and correctly. Okay, so you can see here we have a demo. You've lost 3 in a row. Okay, you're down 2%, you're down 4%, you're down 6%. So what do you do? Okay, which way do you go? Do you move up or down? Because up is going into like stuff like revenge trading, missing parts of your plan, the trend isn't clear, you're taking barcode price action, right? And you're continuously losing. So you make this 3 loss streak 1,000 times worse by continually losing. Okay, while if you're sticking to the process, all right, yes, I've had 3 bad losses. Right? Like I wish they were winners, but they were losses, but it is what it is. I followed my process. I wait patiently. I get 6%. Okay, then I get another loss. I get another 6%, another 6%. And then I realized, okay, wait, my formula actually is correct. All right, there's a reason why I'm sticking to my formula. There's a reason why I have this trading plan, this trading system in place. Okay, because over a bigger stretch of trades, I know that this will end up being profitable. Okay, as long as I consistently stick to my plan. Okay, sticking to your plan should be the number one thing. Okay, don't worry about your profits that you make. As long as you stick to your plan, then that's perfect. Okay, and that's why some traders just break this formula. All right, that's why they don't stick with it. Alrighty, the reframe. Okay, you need to reframe and sort of re-question your brain and thinking in how trading works. Okay, so what do you stop asking? Stop asking, did I win? Okay, doesn't matter if you won or lost. Okay, what you should be asking is, did I follow the formula? Did I follow my process? Okay, did I follow all my steps, all my criteria? Did I follow my system in general? Okay, did I just stick to the plan that I've actually set out for myself? All right, because as soon as you start asking, did I win? You're doomed. You're destined for failure because you're starting to think about the money, and when you start thinking about the money, you do stuff like over trading. All right, you revenge trade right after a loss. You're like, there's so many bad things that could happen. Okay, the only thing you should be thinking about when you're trading is, did I follow my formula? Did I follow my process? Did I follow my systems? Have I been consistent? My next 10 trades is going to look like my last 10 trades, okay? Need to stay consistent. Your job as a human really is only process execution. You just need to be executing this process that you have, okay? You're not predicting the outcome, okay? A lot of people think that traders can fully understand from here on out, okay, where is the market going here? No one knows, okay? No one has any idea where the market's going here. It could be going up, could be continuously going down, could be going straight down, okay? Can't predict it. No one predicts it correctly. It just is what it is, okay? Proper traders and genuine profitable traders, all they do is they follow a process execution, okay? They follow their process and they execute it, okay? Simply as that. Consistency in inputs is the only thing you control, okay? You have a process set out. The only thing you can do is do it and do it consistently. Okay, you're not doing it consistently to the point where you're taking random trades and stuff. This is what your equity curve will look like. Okay, you're going to blow your account up. You're going to lose a lot of money or all of your money. All right, but if you're consistently, let's say this is your trade and you realize, oh shit, like I've got 5 losses in a row, or I'm 10% from my peak, right? But then from this point on, let's say like this, I'm 5% down or I'm 10% down or whatever. What should I do? I need to stick to my process. Okay, sticking to my process and my plan. All right, it actually got it better. Okay, this is over, let's say 40 trades. All right, instead of this 10 trades or 20 trades where the strategy, was it unprofitable? Well, those 10 to 20 trades, yeah, it was, okay. But was it profitable for 40 trades? Yeah, it was. It was profitable, okay. I did make money. My equity curve grew, and that's what it is, okay. I don't care if I really made money or not. That's just a side like little side thing. But in trading, did I stick to my did I win? Wrong thing to ask, okay? Did I follow my formula? Did I follow my process, okay? Did I stick to my process? Did I deviate anywhere out of this, okay? This is the question you need to be asking yourself if you want to be a serious profitable trader in your trading career.